What's up guys, Q here from Hyperstocks. Today we're going to be discussing some of the most popular electric vehicle stocks on the stock market, starting with Nikola, and we're going to be jumping into their charts just momentarily to go ahead and talk about if they are a buy or not, especially Nikola. So why are we talking about Nikola in the first place? If you don't know what the company does, which is NKLA on the stock market, which is a recent stock that was part of an acquisition group in which led into something called the electric truck. And if you're not familiar with how it looks exactly like a Raptor. But that's another story that some people may want to argue with. Overall, the stock's truck looks pretty good and the stock's chart looks even better, especially if you're one of those people who likes to trade based on hype. If you are that type of person, then NKLA is your perfect stock due to the reason of it being completely overvalued as of a new IPO at least. So that's just my humble opinion. I'll let you make your own humble opinion after we finish the charts. But not to say that there isn't an opportunity with this company for future investments. But for right now, what we call Nikola is a high-risk play investment stock. High risk because the stock doesn't have a lot of historical analysis for us to base it off of. Remember that trading in the stock market is all psychological. You look to the left side of the chart to predict what's going to happen in the future, or on the right side of the chart. With Nikola being so new to the market, we don't have any historical analysis on it, but let's go ahead and discuss why it is important to keep an eye on it. Reason why is because stocks like Nikola are going to be leaders in their industry, just like Tesla was for normal vehicles. While Tesla has their own electric trucks and electric future in line, and they probably have more skin in the game because they've been around longer, it doesn't mean that other competitors are going to pop up in the market just as much, Nikola being one of them. And that gives opportunity for investors like you and I to seek out these companies before they become really popular. Tesla IPO'd 10 years ago, I believe, and it's gained over 1,000% since its IPO. Now we have more and more companies that are just like Tesla, or maybe on their way to being like Tesla, IPOing in the same direction and giving you opportunity to invest before other big money investors jump in and skyrocket the stock. If you're a part of our community in the Hyperstocks community, but you don't have to be for the rest of this video, you received a watch list that included a company called Chara in it. Chara is a company in which moves electric waste and disposes of it correctly. And companies like this are the companies that you want to seek out before the other big guys do. And you may have not heard of this company because it only had 275,000 in volume today. But it gives us more opportunity to gain in on it before the stock is driven up completely and pumped to sky limits. Now let's talk about whether you should buy Nikola at its current price of around $67. So without further ado, let's go ahead and jump right into the charts and discuss Nikola. Alright guys, so now what I've pulled up in front of me is Nikola's chart, and I haven't pulled it up fully because I wanted to explain what platform I'm using because I know this may raise some questions. I personally use TradingView.com for all my charting and my analysis along with Thinkorswim, but today we're just going to focus on TradingView.com. So I've pulled up Nikola's chart here, which I'm going to show you the full chart in just a second. Here we go, it's pulling up. And so far what I've laid out are some resistance and support lines that the stock has created in the past few days of trading. So I'm going to go ahead and delete these supports and resistances completely, and I'm going to redraw them for you to show you how you could play Nikola for your own portfolio and how you could profit off of it just by following these simple rules. So let me go ahead and clear this. Let's go ahead and break down what's been happening with the stock as of lately. So after VTIQ and Nikola merged, if you own VTIQ stock, now you automatically own Nikola stock. And if you did, you are one lucky person because the stock went from $42 to a high of $73 in just a matter of a day. The next day the stock went to a high of $94 before getting rejected, and so now on that rejection mark we can draw a resistance point because that's the highest price that the stock had achieved before getting rejected. So draw a resistance point at $94. On that rejection, you want to see where the stock pulled back to before bouncing back up. You could see that the stock had pulled back from $94 all the way down to $55.50 before bouncing up on this green candle. So it's safe to place a support line right at that $55 price point. And so now we have a resistance and a support for us to trade the stock based off of. So now the question is there another resistance on the way for us to break before the stock goes back up to $94 if it ever does so? The answer is yes. You could see that through the days that the stock had been trading, the stock had made it up to around $75 before getting rejected. And you can see that happening right at the top of this candle. So the stock made it to 75 before getting rejected. Therefore, you should place another resistance point right at that very price point, giving us another resistance to trade the stock based off of. Now we want to see if there's another support that was created during that move, and the answer is also yes, because the stock, as you could see, the candles never went below $63 on any of these closing days. Every candle in this situation represents a full day of trading because I am on my daily candles. So through all these days, the stock never went below the $62.80 mark. Now we know that the stock's initial trading range that we need to focus on is going to be between the $63 support and the $75 price point. So how do you play the stock from here? You're going to create a trading range, which we've already done, and you're going to enter the stock anywhere between these two price points, and you're going to put a stop loss just below the $63 support. Because then if the stock does fall below that support, you know that there wasn't enough buying pressure and the stock lost its support, and you can expect it to go to its next support, worst case scenario, but you would have exited the stock at a safe stop loss before that happens. So after setting your stop loss, you're going to put a resistance point at $75. So that resistance point at 75 will determine your breakout point. And what a breakout point simply is the price that the stock is expected to resist before finally pushing over. When the price of a stock increases past that resistance, it typically means that there is a higher demand for the stock, causing the price to go back up. So it's like supply and demand. The more that the stock gets rejected at that 75, the more glorious the breakout will be when it eventually achieves that price, because now demand surges past 75, therefore causing the price to go up. So now what happens? After the stock breaks 75, you want to move your stop loss from the $63 point to the $75 point, because the moment the stock breaks that resistance, now it becomes a support zone for the stock, and the stock should not go past it for it to be a healthy continuous breakout. After that, your price target is going to be the very next resistance that the stock had before it dropped below, and that resistance happens to be right at the bottom of this red candle, because that is the gap that the stock created when it fell the second day. Every stock likes to fill the gap that it had initially created, and the stock gapped down from June 9th to June 10th by about $5. So the stock is going to try to break 75 and fill that $80 gap, and then finally move up to that $93 point before testing it to make all-time highs. Now keep in mind that nothing is definitive in the stock market, and this setup may completely fail, but that's what you have your support zones for, to set up a stop loss for you in case the stock goes south. But anyways, guys, thank you for checking in. That was just a brief explanation on NKLA and how you could be trading it for your own portfolio. If you'd like to see other electric stocks or maybe other stocks down the line, please don't forget to subscribe to our channel. If you liked the video, please give us a thumbs up. Thanks again for checking in.